Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, August the 25th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the overall markets with my market analysis, and I do the same thing in these daily market commentaries. But I layer on top of it a few other things that I add into my portfolio, like option strategies based on those assumptions we come up with. But I also have guidelines that I teach you guys in my webinars in more detail than I do here in these daily market commentaries. So please go check those out, as we are going to really drill down on those different option components and show you specifically the right time and opportunity for these option strategies. All right, so without further ado, let's get on with the economic data. Across the pond, what do we got? Nothing really to speak of that's going to really impact the overall markets. But here in the United States, we got some economic data in the form of Richmond manufacturing. Now, this is the manufacturing sector, which is very important at this point in time. Coming in at 18, expected to be 10. Also, we got the CB consumer confidence. That's not so great. It came in a little bit lower than expected at 84.8 and expected to be 93. They also revised last month's number down slightly by about 1 point. Now we're talking about new home sales continuing to knock it out of the park here, coming in at 900,000, expected to be 787,000. So obviously we've been talking about this home sales market, or the home the home ownership really going through the roof, prices going higher, continuing to see that robustness in the housing market with this number. And they revised last month's number up by about 25,000 there as well. So that, yes, not quite 25,000, not even, probably 15,000. All right, so let's talk about the overall markets. Right now we're checking out crude oil. Right, we haven't gotten an inventory number. We won't get that until tomorrow, which will really determine what we're doing there. We're continuing to see drawdowns in that aspect, so that's been giving crude oil a little bit more of a lift. As we can see, it's making a move today up into the 23 handle, but again, I do expect it to stay between 45 and 39, or sorry, 39 for the foreseeable future. Now that we're kind of in that range between the 50 Fibonacci and the 61 Fibonacci there, that is going to be our support and resistance. We can also see the 200-day and the 50-day coming in, or actually the 200-day and the 50-day coming in line, getting ready to make a cross. Now, once that cross happens, that signals a little bit longer term bullishness, but we can see they're kind of leveling out just a little bit as they come tighter together. So gold futures. We can see that they are coming off a little bit today, testing that 123 handle that I've talked so much about, that is acting as a major support. Remember, that is the last all-time high in gold before we pierced it. I do expect us to try and hold on to this, and even if we break below it, I'm not all too concerned about this, because I'm starting to generate or build this bearish case for the overall equities, especially in the NASDAQ and the E-mini S&Ps, to start having a bit more of a correction. We have had this parabolic move across the board there, and I do expect us to really start seeing some sector rotation. I think that, you know, the market always wants to hurt as many people as possible, as often as it can, and it seems like we are building the perfect storm for that, especially with the Robin Hood effect is what people are starting to call it, where the newer trader has come into this market gangbusters and really driven this market higher, where the rest of Wall Street investors have been a little bit more on the sidelines and a little bit more tepid on their buying of different securities. And we've seen this now that Tesla and Apple have decided to do some stock splits to make it more accessible to some of these Robinhood trader or the Robinhood effect traders, which are going to generally have a smaller account value, and the belief is that they are going to be able to go out there and participate in these stocks. So it's really driven these markets a little bit higher, and I think that that is part of the catalyst as well, that is going to be a disappointment to some people. So I'm looking to add some protection to the downside in my portfolio, and we'll talk about that here in a little bit. But I think that that is also going to add a little bit of buoyancy to gold futures if we start seeing that correction. So I don't have any positions in gold anymore, but I do believe it is going to try and hold on to that level there and stay in the 1900s and probably stay above that 1923 area and revisit that 2000 mark again. All right, bonds are off by a point, but still right in and around where we've been talking about as the point of control, being that magnet that the bonds are going to want to stay at between the 183 and the 176 handles here in the bonds. Yes, we're closer to that 176 area of support, but again, the point of control here for the time and the volume are slightly off, or at least at different levels. But the fact of the matter is we've created a nice big bell curve there. So that is a point of comfort for the overall markets. And I think that we're going to stay there. I don't think that we're going to lower interest rates, and I definitely do not think interest rates are going higher anytime soon. The risk really is that we're going to see more stimulus and more quantitative easing, which would weaken or actually give buoyancy to the bond market there, as interest rates would be more suppressed. And then moving over to the VIX. VIX starting to get a little bit of a push here. As the day goes on, it seems like we're getting a little bit weaker here in the equities across the board. You can see the Dow Jones Industrial Average off by about 117 points. And something I want to really talk about here, and this is what's giving me some pause with these overall markets, is that we can see that this doji right here at the top is really signaling a bit of a top, and that we might want to roll back to the point of control, which is right in and around here. So I do expect us to lose a little bit of steam here in the equities. We're due for a little bit of a correction. How that correction works, are we going to break below the line here, is going to be key. Well, I drew that a little bit low, but you guys get my drift, that a line below this little area right in around there is going to be where we look for support. But I do think that with this doji at the top here looking a little bit bearish, if we look at even the ETFs for these different, sorry, let me move that out of the way. If we start looking at the ETFs, because they are only traded during the day session, we strip out the overnight trading, it looks a little bit more bearish even in that regard there. NASDAQ still pushing higher, back into that trend line I was talking about. Yesterday we pierced up into it. Today we are above that and near the highs of the day in the NASDAQ, but it just feels a little bit weighty or frothy, however you want to say. Just seems like we're topping out a little bit, and that's a parabolic move. We can see when we had a trend back here that it was a little bit more flat, which it isn't as concerning as when you have this steep move that we've had. It's just been really gangbusters to the upside, and I do believe we're going to correct and at least test the low of this trend line here, lining up around here. So I do believe we're going to come down there and at least test that. We might even break below that and start revisiting some of these other volume nodes like this one here. All right. So with that said, I'll talk about my trades that I put on for that protection here in a little bit. E-mini S&Ps up 2 points on the day, could call it unchanged. But again, as we saw with the Dow Jones with its candle set up, you can see that we're getting a little bit of a top there. Again, I'm usually early. I don't always wait for the confirmation of this. But if we were to finish here or near the lows of the day and get another candle where tomorrow starts looking like that, that is going to be the topping pattern I'm looking for to revisit right here at the 32.42 area, or what lines up with my 78 Fibonacci there. Now, a lot of people would be expecting us to go down and test this 61. I don't know if we're going to get that far, but I do believe we are going to see some type of correction down here in the near future with the equities. That didn't get rid of that. Let me just pull that off to there and move on to the breakdown of the mini S&Ps overnight. Very bullish, big rally towards the end of the day. It was like a rip your face off towards the end of the day, where we started just lockstepping, popping as soon as we got to that high that was printed overnight, which, you know, they like to print those highs overnight in the day session. No attempt to do that today, which is a little concerning. I think that we might start seeing this market correct to the downside and revisit some of these other points of controls to the downside as well. So markets, to me, look like they're just a little bit toppy going forward. Now, Uber, remember yesterday I was talking, I put in a GTC order to buy it back at 29. I decided late in the day that I wanted to take advantage of just doing some dollar cost, or lowering my overall cost basis on this while we're playing around with it. And I just ended up selling the September 29 puts in there for 74 cents. So, you know, today we are seeing a little bit of bearishness. It's right around where I put those on yesterday by at least a couple of pennies. So if the market pulls back there, that's kind of like my synthetic out, if you will, and I can lower my overall cost basis in the meantime. So continuing to stay mechanical with that. Switched gears a little bit late in the day and decided to throw on some covered puts with my short in Uber. All right, remember I got short Uber based on some calls that I had traded last Friday, or last Thursday. All right, this is the trade. Now, this is what I was talking about with the ETFs, this Hangman Doji right there at the very top of a pattern is usually pretty bearish. Now, we did print a high here again today, which somebody could say that it isn't confirmed, and no, it's not. If you're looking at a specific technical setup, it's not confirmed. As a matter of fact, it's over and above yesterday. But I do feel like that is the start of this rolling over type of pattern that we're going to start to see here shaping up in the next few days. So with that being said, in SPY, which is this trade, I went in pretty small and did the December that, you know, expire in 118 days or something. So I'm trying to get out there where theta isn't going to really affect me. I believe that we're getting in a low implied volatility environment. If we start getting this correction, volatility will start expanding and help me out with this trade. So I went in there and bought the 327 puts in there for $13.31. Similarly, over there in the NASDAQ, I wanted to take advantage of that because I believe that they've had more of a parabolic move, as you can see with this trade. And yesterday's topping pattern, not again confirmed today. We're rallying in the triple Qs and in the NASDAQ. But again, still looks like one of those topping patterns where we've got that doji at the top. Not confirmed yet. It's kind of an inside of that in this particular setup. But again, I think that the market is due for some correction. How far of a correction we're going to get is not really clear at this point. But like I said, some of these high flyers like Tesla, Apple have really driven this market to these highs. And if we start seeing a shoe drop, I think you're going to see a mass exodus of some of these trades that people have put on for this Robinhood effect, which has created most of this rally here. People are attributing it to anyway. So I've taken advantage of both of these. Again, did it a little bit small, just trying to add some negative deltas to my portfolio to protect myself on the downside. Again, went into those D's contract and bought the 268 puts in there for $13.21. So very similar in regards to my strike location, I'm looking at that 36 delta strike, and they're correlating to those overall option strikes. So following those guidelines that I set forth in these webinars that we're talking about, low implied volatility percent, I'm looking to increase my duration just to add that protection. And I did it small. I don't want to overwhelm my overall upside potential, but I do want to add some of that downside protection in case we get a correction here anytime in the near future. So that's what I've done so far, looking to cover some of my Uber trade, lower the overall cost basis there, added some downside protection for the overall market, and other than that, writing out the rest of those positions. I haven't adjusted anything there. All right, so that's all I've got for you guys. Other than take a moment to go over our disclaimer, as we are an educational company. I'm not here to try and solicit you guys to jump on board with the trades that I've done. All I want to do here is make sure that you guys are clear of what, there we go. There's our disclaimer. Make sure that you're clear as to your investment objectives. Make sure that you know that there's risks involved here, and make sure that you know that this is appropriate for your risk parameters. All right. So that's all I got. Other than, if you can't take that, take it easy.